$40,000. That's what Tesla advertises the Model 3 for. But 5 years later, after everything, the loan, the insurance, the depreciation, the charging, the real number is closer to $79,000. And that's after the federal tax credit. Today we are running the full math, every single dollar. Here's exactly how we're running this. We're tracking a 2024 Tesla Model 3 rear-wheel drive. Base price $40,240. Standard financing. 7% APR over 60 months, 20% down. We're comparing it against the 2024 Toyota Camry LE, the most popular mid-size sedan in America, at $28,029. Same financing terms, 12,000 miles per year. National average fuel and electricity prices from the U.S. Energy Information Administration. No estimates. Every number is sourced. Let's go. The sticker says $40,240. But here's where it gets interesting immediately. The Inflation Reduction Act still offers a $7,500 federal tax credit on qualifying Model 3 purchases. If your household income is under $150,000 and you owe at least $7,500 in federal taxes, your effective price drops to $32,740. Suddenly, the gap between the Tesla and the Camry is only $4,700. That's smaller than most people expect, but the purchase price is the easy part. This is where most Tesla calculators stop. We are not stopping here. With $8,000 down and 7% APR, your monthly payment on the Model 3 comes to $848 per month. Over 60 months, you'll pay $50,880 in principal and interest combined. The Camry runs $562 per month. Total $33,720. The Tesla demands $17,160 more in loan payments alone. So right out of the gate, the Tesla is in a hole it needs to climb out of through savings elsewhere. Let's see if it does. Here's the number nobody puts in the ads. Insurance for a Tesla Model 3 averages $2,200 per year in the United States. Over 5 years, that's $11,000. The Camry averages $1,650 per year, $8,250 over 5 years. Tesla insurance runs $2,750 more over the same period. Why? Repair costs. Tesla parts are expensive. Calibration after even a minor accident requires specialized equipment. Body shops certified to work on Teslas are still limited in most markets. A small fender bender can run $3,000 to $6,000. That risk is baked into every premium you pay. Now let's talk about energy. This is where the Tesla starts fighting back hard. The average American drives 12,000 miles per year. In a gas-powered Camry at 32 miles per gallon, that's 375 gallons of fuel annually. At the national average of $3.40 per gallon, you spend $1,275 on gas per year, $7,650 over 5 years. The Model 3 consumes roughly 25 kilowatt-hours per 100 miles. 12,000 miles means 3,000 kilowatt-hours per year. At the national residential rate of 16 cents per kilowatt-hour, that's $480 annually. $2,400 over 5 years. Tesla saves you $5,250 in fuel over 5 years. That's real money back in your pocket. Maintenance, no oil changes, no transmission fluid, no spark plugs, no timing belt. The electric motor has a fraction of the moving parts of an internal combustion engine. Tesla's maintenance over 5 years is essentially tire rotations, cabin air filter replacements, and the brake fluid check. Total 5-year cost, roughly $1,500. The Camry, factoring in oil changes every 5,000 miles, air filters, belts, coolant flushes, and general wear items, approximately $4,200. Tesla saves $2,700 in maintenance. Another real advantage. But now comes the number that quietly absorbs all of these gains. Depreciation is the largest cost of car ownership, and this is where the Tesla story gets genuinely complicated. In 2024, Tesla made multiple price cuts, sometimes 3 or 4 in a single year. Every time Tesla drops the price of a new Model 3, the resale value of every used Model 3 falls with it. According to IC Cars data, the 2024 Model 3 loses approximately 48% of its value over a 5-year period. On a $40,000 vehicle, that is $19,300 in depreciation. The Camry depreciates roughly 35% over 5 years. On a $28,000 car, $9,800 lost. The Tesla loses $9,500 more in value than the Camry over 60 months. Now let's build the full 5-year picture. Tesla Model 3, $50,880 in loan payments, $11,000 in insurance, $2,400 in electricity, $1,500 in maintenance, $1,500 in registration and fees, $19,300 in depreciation, minus the $7,500 federal credit. Total 5-year cost of ownership, $79,080. Toyota Camry, $33,720 in loan payments, $8,250 in insurance, $7,650 in fuel, $4,200 in maintenance, $1,250 in registration, $9,800 in depreciation, total $64,870. The Tesla costs $14,210 more over 5 years. Spread over 60 months, that is $237 per month. That is the true premium for driving a Tesla. $237 a month. That is what the math actually costs you above a mainstream alternative. Is that worth it? That depends entirely on what you value. If you charge at home every night, live in a state with above-average gas prices, and hold the car past year 5, the math improves significantly. If you rely on superchargers, live in an apartment, and trade cars every 3 years, you will lose substantially more. The depreciation curve gets steep fast in years 1 and 2. Here is what the numbers make absolutely clear. Tesla is not the money loser its critics claim, but it is also not the cost saver its fans insist. It is a premium product with a real premium cost, softened by genuine savings in energy and maintenance, and quietly eroded by insurance rates and depreciation nobody advertises. Run your own numbers. Check actual insurance quotes in your zip code before you sign anything. Model the depreciation against your specific timeline. Because the honest answer to whether a Tesla is worth it is not yes or no. It is a math problem. And now you have the framework to solve it. This is not financial advice. These figures reflect national averages and will vary based on your location, insurance profile, and driving habits. Every number used in this video comes from a primary source. Links are in the description. And if you want to see what happens when you add solar panels and home charging into this equation, that simulation is coming next. Hit subscribe so you don't miss it.